Hey, Bankless Nation, happy third Friday of October. David, what time is it?
Ryan, it's the Friday Bankless weekly roll-up where we cover the entire weekly news in crypto, which is always an ambitious endeavor, yet we persevere nonetheless. Into the frontier with coffee, with your Friday morning coffee.
David, before the show, you told me you had too much coffee. How much is too much for you, man?
3 cups.
3 cups?
Yes.
So is that what you had before
I had 3
recording
cups.
this?
Yeah. Mm-hmm.
And that's like before 1 p.m. 3 cups.
Yes, that's 3 cups before 11 a.m.
How do you know it's too much? The jitters?
Yeah, you just know it. You just feel a little bit jittery. Yeah, a little bit manic. You know. People know.
I'm on my 7th cup, David.
That is insane. That is insane. I would die.
I think.
I would have to like sit down on the ground and just wait for that to pass.
Sorry, 7th so far. I shouldn't limit
ridiculous.
myself. The day is still young. Yeah, I might have a problem. Anyway, happy weekly roll up. Just enjoy 1 cup of coffee, if you will. We're not encouraging more than that. Just 1 with your weekly roll up. David, we got a lot of hot topics this week. Number 1, SBF. That is Sam Bankman-Fried, the billionaire, super billionaire, founder of FTX. He's got some ideas on how to regulate DeFi. David, I don't love a lot of these ideas. How about you?
No, I don't remember seeing him asking the rest of DeFi about thoughts about things. He's kind of going rogue on this one. Following SBF, Aptos, the newest layer 1 on the block from ex-Meta employees, launched, but also flopped. We'll talk about that. Ryan, what are we coming in third?
Ethereum censorship. It's been a hot button topic. We did that episode with Justin Drake, but it is increasingly a hot button topic, particularly around relayers. We're going to talk about what relayers are, Flashbots, all of these things. And the big question, I think, for the Ethereum community is, are we in a critical state? Or is this a nothing burger? Do we have to sound the alarm or not? So we'll get into all of these things. As always, make sure you like and subscribe wherever you are listening to, wherever you are watching. That gets us up to the top of the charts. David, before we get in, we have a message from our friends and sponsors at Push Protocol. David, this is an app that I know, love, and I use. The way you activate this app is you just enter, you log in with your wallet address. And what you can do is subscribe to alerts, very handy alerts. I don't know how many times I have woken up in the middle of the night being like, oh my God, am I about to get liquidated? It's my maker. Like,
how many times, Ryan?
Like, well, not so much
times.
this cycle.
0 times for you.
But I will tell you, in the original cycles.
Sure, first cycle, yeah.
2018, 2019, things were getting pretty tense.
Right.
And then also my ENS names, for example, like when do they renew? You need to know that. There's nothing on-chain that will let you know that, except for Push. You can opt into notifications about ENS, about your collateral requirements, about whether you are in the money or out of the money on a Uniswap liquidity pool. There's literally hundreds of different alerts you can sign up for. David, what do you like about this app?
Well, as the metaverse, with the thing we're building that Ethereum is going to be this like scaffolding skeleton of, builds out, we need push notifications to go and, because that's, what do you do when you wake up in the morning, Ryan? You look at your phone.
I check my phone.
Yeah, right. You get your push notifications. So the metaverse is going to need something like Push to notify people of shit going on in the metaverse. And so you can go and check them out at push.org if you are interested in receiving push notifications or pushing push notifications to your users.
David, I got one in there for flag me when ETH is under $895, because that way I can outbid you and get in lower if it happens this market cycle.
Yeah, well, I don't think there's what you have to sign in for a DeFi app to get notified of that DeFi app that wants to notify you of that.
No, it's actually off-chain stuff too.
Oh,
they have like price
cool.
alerts in here too.
Oh, cool.
Yeah, on-chain or off-chain.
Awesome.
You can even get alerted with your favorite crypto publications like Bankless France. New post from Bankless France.
Get in there.
Yeah, pretty cool. All right, tell us about markets. Speaking of price, what's Bitcoin doing this week?
Nothing. Not really anything. Started the week at $19,150-ish, ending the week at $19,150-ish. So flat, super flat.
I'll take it.
Yeah.
Better flat than down.
Yeah.
How about ETH?
ETH, also flat, 12,800 or 12,080 currently, and that's where it started this week.
Is this another crab market? Is this like the summertime
Yeah,
blues?
so when we recorded the last weekly roll-up, it was like when we had like nuked down to like $1,200, and then as soon as we got done recording the weekly roll-up, we bounced right back up to $1,300.
Correlation?
The $1,300 like number for Ether and like $1,900 number for Bitcoin is like super just a magnet,
Sticky.
I guess. Like, yeah, sticky.
Sticky right now until something new happens.
Yeah.
What is that new thing going to be? It's got to be macro. It can't be in crypto.
Yeah, it's got to be
not
macro.
Much,
It's got to be macro.
We're post-merge. What's the
Yeah.
next exciting news in crypto? The halvening?
That's the thing. There's like a bunch of exciting things in crypto, so no one can focus on one meme because there's like 3 different things, and they're all like smaller than the merge.
A lot of smaller building going on. No like main chain major events here. How about the ETH to Bitcoin ratio?
It's flat. It's flat.
Also flat.
Surprise.
Okay. That's actually not bad for ETH in the bear market, though.
Yeah.
I mean, you'd expect during the bear market much more loss in the ratio. And we're not seeing it.
In history, yes. If you look back to history, yeah.
This is history. Look at this.
Yeah. That ratio looks so good. The problem is the ratio looks so good over like a almost coming up on 3-year time horizon now. So in order for that to like continue it looking good, like it's just going to take 1.5 more years for that to like keep on going up. Anyways,
you know what
long-term focus. Long-term focus.
You know what I saw this week, David?
What?
You have hashtag Bitcoin in your Twitter bio right now. I saw that.
There's a story behind that.
Do you have this story? Is this a story that is disclosable?
No, it's not.
Okay. Bitcoin shills paid David. That's what it means.
Yeah, Bitcoin shills. Yeah.
Is that what happened? I think this is a private bet among friends that he made. That's my guess.
That
just
I
reading
lost.
the body language here. That maybe he lost. Okay. There are worse things to lose. That's pretty funny though. David the Bitcoin bull. Global crypto market cap. What are we looking at? Are we under $1 trillion?
Under $1 trillion. 956 billion. 956 billion.
Okay, that's all. Is that also flat in the week?
Yeah,
Neither up nor
basically.
down.
It was a flat week.
All right. Summary: flat week. Neither up nor down. Housing mortgage rates are going up though. This is a tweet from Guinevere. Breaking 30-year fixed rate mortgages hit 7.15%. Also breaking the housing market. It feels that way. 7.15%. I've never seen rates this high in my probably lifetime, my adult lifetime.
So what does this mean for me? I'm a crypto person who bought a house during the bull market.
You own a house. Good
I own a
job.
house. Yes,
okay.
thank you.
Can I ask you, did you buy that house or do you have, is this a personal question? Do you buy that house or do you have a mortgage?
I have a mortgage.
You have a mortgage?
Yes, I have a mortgage.
What rate did you lock into that mortgage?
2 point something.
Hell yeah, David. All right, this is my take on that tweet. All right. Okay, actually, I don't have that tweet up, but here's what I said. Locking in a 3% fixed rate mortgage or under is the new I bought Bitcoin under $300.
Okay, but I also bought the top of the housing market though. So like,
I know, but
which one am I happy or sad? I don't know.
Well, right now, mortgages are going up, but house prices aren't dropping. I don't know if you've looked at the Zillow rates for your house.
No.
I bet it's probably the same or at the level that you bought it in terms of like market value.
So I'm happy.
You're happy, and the best
cool.
thing about that is, not almost who cares, but like you locked in at 2 point what percent?
2%, like 2.7, 2.9.
2.7, 2.9%.
I think that's right. Yeah.
You're printing money, man. Like, congratulations. All right, we're
Thanks.
inflating at like 7 to. This may be the best financial decision you've ever made.
That's probably true. It's not even including buying Ether at $80.
No, we can't include that. Other than Ether, this is David's best. So far, we don't know this. But you locked in a interest rate on a 30-year fixed rate mortgage at 2.7%, 2.79%. And money, like inflation, is 8%. So what's your delta, man? You're making 5% per year.
Oh, good for me.
Thank you, Uncle Sam.
That's great.
Thank you,
That's great.
like the dollar. You actually, like in high inflationary environments, you actually want to have a lot of fixed rate debt.
Right.
Because it means you don't have to pay it. Very nice to be a debtor in these times for mortgages.
Cool.
But let me tell you who is screwed, David.
Everyone who is younger than me.
Gen Z. Totally. I don't get. Do you know how like the meme of, which is true, like millennials getting screwed, like 2008 financial crisis, and then you can't afford a house, and how many millennials are like not able to afford this? This is look at this. Value, beauty, and charm. This is a 4-bedroom, 2-bathroom house somewhere in the burbs. 1950 something? 54?
Yeah.
Rent is $87 a month.
Yeah, but that also has in a ton of like loss in value of the dollar. Like how much you could get a cheeseburger for like 50 cents back then.
This is also true. There's inflation baked in, but it's also true that home prices as an asset, like homes themselves, have risen far faster than inflation, like something like 3x, 4x. And so I thought millennials were screwed, but like Gen Z, now how are you supposed to afford a house when house prices are so expensive and like your interest rates are like 7-8%? What's like the monthly payment look like on that?
Yeah. Well, isn't every single generation further away from the boomers just more collectively more screwed?
It's seeming that way.
Yeah, I think that's kind of how it works. Like the further you are away from the boomers, the harder it is.
This is how it's seeming so far. Absolutely brutal. But you know, the rates keep increasing. This is a tweet from our friend Michael Saylor. If you flew an aircraft carrier like this, you would A, stall, B, rip the wings off, or C, crash and burn. And he is showing a chart of the U.S. 1-year government bond yield. This is bonds. This is the yield of bonds. This is kind of showing you what the Fed is doing, the central bank. And for those of you that can't see listening to the podcast, we see in 2018 kind of a brief bump up and then massive volatility, spike all the way downward to zero, COVID spike, and then this crazy ascent. David, you've flown planes before. Possible to take off like this? Is that how planes work?
Yeah, you need a massive engine to be able to do that. You need
Like
to
a
be
rocket
in
ship?
Yeah, you need to be in like a jet. You need to be in a very fast, lean jet.
Okay, so validate this. If you flew an aircraft like this, would you rip the wings off, David?
You would stall. You would stall. Is what what you would do. You would run out of energy. Yeah.
This is crazy. I feel like it's the next experiment of the central banks is like how much volatility can the bond market take before the wings get ripped off?
Currently taking more than Bitcoin. Remember that from last week? Yeah.
Yeah, true. Meanwhile, tell us about ultrasound money, David.
It's super ultrasound, Ryan. I'm so glad you asked. And so last week was the first week that we had a ton of burn. And this week we also have a ton of burn. I think last week we're at 5,000 Ether issued since merge.
Yes.
Right now we're at 3,700. Going down.
That's what we like.
Yeah, that's what we like to see. And so the current supply of ETH has like peaked out at 120,534,000 was what it was about 2 weeks ago. We are now down to 524,000. If we continue on this trajectory, Ryan, in like maybe 3-4 days, we will actually be below the Ether supply where we were when we merged, and Ether will become deflationary since the merge. That is awesome. Last week, we talked about how this was because of this like new Ponzi token, Zen Crypto.
Yep.
Well, actually, in the last 3 days, it's been Uniswap v3, OpenSea, and Uniswap v2 as the 3 largest burners of ETH, collectively burning basically 3,000 Ether. Above Zen Crypto, still burning 900 Ether, and then ETH transfers burning 800 Ether, Tether transfers burning 630 Ether. So this is good, real, sustainable burn, not from some Ponzi token. And we are still going down. So, and just to recap, at the peak of issuance, when the supply of Ether was the highest, there was something like 0.22% net inflation per year. We are all the way down to 0.03% net inflation per year. And if this burn continues, man, we are going to be deflationary since the merge. Wow. That's cool.
Look at all this. What I like about the burn leaderboard too is like it's all of these use cases of ETH as money. A lot of the Uniswap trading pairs are actually ETH. ETH transfers, number 3, burning a lot of ETH, using ETH as money. I guess ETH is money after all. Maybe even, I'm not going to say it. I am going to say it. Ultrasound
money. It's gonna be ultrasound money.
Maybe. We're almost there.
We're almost there.
It's kind of
almost there.
It's my this will never not be my favorite website. Yeah. I can't imagine a better, what's better than this?
It's great.
Name me a better website on the internet, David.
Oh, if we wait one more block, we're going to watch it go down below 3,700. Wait for it.
You really want to do it.
Wait for it.
Every 20 seconds, 21 seconds. New block every 6 seconds.
Oh, I did. It only went down a little bit.
Nope. Anticlimactic. We'll edit this part out. What's happening with Euler?
Euler TVL hitting a new all-time high at almost $300 million. Euler, a new money market on the scene, like the likes of Compound, Aave, Rari, but a little bit more governance minimized, a little bit more algorithmic. We recently did a show with them, an Alpha Leak. Coincidence that it's hitting a new all-time high of TVL? I don't know. But if you want to learn all about Euler, I did an Alpha Leak with Michael Bentley to learn all about it. Disclaimer, Ryan and I are angel investors in Euler.
We are, and that token is now on the market, though.
Yes, that token is now on the market. Yeah.
Angel investor a long time ago.
That was one of the first ones we did.
It took that project a while to come out. Token terminal. What are they doing? Okay, actually, this is music NFTs, and I know you've got a take on music NFTs, but I'm feeling some bullish vibes from you, not only David, but as other members of the Bankless team. Keep talking about music NFTs.
Right.
Is it showing up in the numbers yet?
It is showing up in the numbers yet. Monthly cumulative side-by-side fees is what we're looking at. Basically, to date, $3 million has been earned by artists, paid for by fans. So $3 million has been transferred from fans to artists. In my mind, all I'm seeing is $3 million of compensation for creating art. And that's what we like to see. $3 million, not that much, but you have to remember it actually doesn't take a lot of value transfer to really move the needle versus what something like Apple Music or Spotify does. Like Spotify and Apple Music for like value transfer from fans to artists is like first gear. Where like music NFTs, where if you buy one single music NFT, that accounts for like 100,000 listens is one single music NFT sale. And so that's like, third or fourth gear in terms of efficiency of what you get if you purchase a music NFT. So I know we're on the Bankless rollup, we're used to numbers like hundreds of millions, billions, blah, 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 blah. $3 million is small, but again, it's such a big order of improvement from what previous Web 2 value transfer platforms provide.
And this is primarily on the Sound protocol too, right? Sound.xyz, which is where, and David was talking about the art is actually music. So these are actually not JPEGs; these are MP3s
also
that
JPEG.
Are selling. JPEGs are the album covers, and then but mainly it's
it's mainly the music. It's the
sound.
It's the music. Yeah,
it's all about the sound. Super cool. You're starting to sound. Okay. So, do you think? Let me ask you this. Do you remember JPEGs in 2020? NFTs 2020 hadn't taken off yet.
Right.
It was late 2020. We had some people on the podcast telling us it was going to be huge, absolutely really big thing.
Yeah.
Do you think music NFTs are where JPEGs were in winter of 2020?
My take is that music NFTs are not for crypto people. They are for music people, and music people are normies. I don't like JPEGs. Definitely was a product that we all like to speculate on, just because there's digital collectibles, right? Very, very adjacent to crypto money is digital collectibles. I think music NFTs are going to be more for artists and their fans, regardless of whether they are crypto people or not. And so I think that is an invalid question.
An invalid question. So in other words, you think it'll just grow differently. So
it'll grow differently. It'll be more mainstream.
We saw kind of JPEGs sort of start to take shape. Firstly, there were crypto collectors of JPEGs, and then it bled into mainstream. And you're saying we sort of skipped that step. I think what you're saying is we kind of skipped that step. There won't be as many crypto collectors. It'll just start with mainstream instead.
Right, because some unknown artist can come in and start making an NFT collectible thing, but to sell a music NFT, you have to be a musician, and you need to make good music. No one's going to collect bad music NFTs, probably, hopefully. Yeah. Actually, I take that back. I could probably see some crypto people figuring that out. But I do think it's just it's more mainstream than what we've seen previously.
Also kind of NFTs, kind of a regulatory proof industry. There's always ways for regulation to apply.
There's always ways for regulation.
So don't let me speak too soon. And yet, this is not as scary as a non-state money asset it seems to be for regulators.
Agree.
Cool. We got a lot more coming up. SBF wants to regulate DeFi. We're going to talk about that, what his idea of regulation looks like. Also, Aptos was a total flop. That's what it sounded like. The newest layer 1 chain on the block. We'll tell you about that. And Ethereum censorship? Is this a problem or a massive nothing burger? We get into that as well. We'll be right back. But before we do, we want to thank the sponsors that made this episode possible.
ARBITRUM 1 is pioneering the world of secure Ethereum scalability and is continuing to accelerate the Web3 landscape. Hundreds of projects have already deployed on ARBITRUM 1, producing flourishing DeFi and NFT ecosystems. With the recent addition of ARBITRUM Nova, gaming and social dApps like Reddit are also now calling ARBITRUM home. Both ARBITRUM 1 and Nova leverage the security and decentralization of Ethereum and provide a builder experience that's intuitive, familiar, and fully EVM compatible. On Arbitrum, both builders and users will experience faster transaction speeds with significantly lower gas fees. With Arbitrum's recent migration to Arbitrum Nitro, it's also now 10 times faster than before. Visit arbitrum.io, where you can join the community, dive into the developer docs, bridge your assets, and start building your first dApp. With Arbitrum, experience Web3 development the way it was meant to be: secure, fast, cheap, and friction-free. The Brave Wallet is your secure, multi-chain on-ramp into Web3, and it's built directly into the Brave privacy browser. Gone are the days of managing multiple wallet extensions that put you at risk of phishing, spoofs, and tracking. With the Brave Wallet, you can securely manage your crypto assets across more than 100 different chains, including Ethereum, Layer 2s, Solana, and more, all without downloading risky extensions. The Brave Wallet is easy to set up and removes the headache of jumping between wallets and extensions. It's lightweight, but packed with great features, like built-in token swaps, buying and holding NFTs with a gallery view, and support for hardware wallets. But also much more than that, because Brave is shipping new features every single month, with a mission to make Web3 easier to navigate for its over 55 million users. Wallet extensions are a thing of the past, so get started with Brave's Web3-ready browser today and experience a decentralized web seamlessly without all the clutter. You can download the browser at brave.com/bankless and click the wallet icon to get started. Ryan, is it time to sound the fire alarm about another regulatory thing coming down the pipeline that's going to kill DeFi? The Alliance DAO, the team out of the Alliance DAO says the DCCPA greatly threatens DeFi innovation. The proposed bill says three things, according to this tweet, the summary tweet: gives the CFTC new powers to regulate spot markets, also forces human intermediation, we don't like that word, intermediation, and also forces projects to sacrifice decentralization. It favors centralized incumbents and kills startups. Alliance opposes the DCCPA. Ryan, you were paying attention to this while I was gone at DevCon. How big of a deal is this?
Yeah, I was paying attention to this. And I guess, in my mind, there are three things to know about the DCCPA. I have a hard time saying that. But this new bit of legislation actually stands for the Digital Commodities Consumer Protection Act. Okay, this is coming out of the the Agriculture Group Committee in the Senate. Three things I think you should know. Number one, it feels like the U.S. really wants to do something with crypto from a regulatory perspective, and what I mean is particularly legislators. And also, I think crypto kind of wants them to. We've been asking for more clarity. There's so much ambiguity. We want our legislators to do something. Number two, I've been told this bill actually has a real chance. There's so many bills about crypto, like hypothetically talked about and batted around. I've been told, David, that this bill could actually pass. Like, it actually might work, and it could actually pass during kind of the lame duck session that we have in kind of the winter time period. The last thing, though, I will say, and this is important, you asked the question of, should we sound the fire alarm? Right. I think the answer is not yet. I know Alliance DAO is kind of doing that in this tweet, but I think the answer is not quite yet. And the reason is the newest draft of the bill isn't yet public. All right. And so a lot of people are fighting behind the scenes, including people, Blockchain Association, people we've had on the podcast, people that are DeFi friendly. These are lobbyists, these are educators, and are legislative. They're fighting to actually make this bill better, make it good. And the fight's not over yet. And so what this tweet is responding to is an early leaked draft version of the bill. A leaked draft version, so not the actual bill. Not the actual bill. It was a version of the bill from like 3 weeks ago, is what I've been told. So, and it is true. It has a whole bunch of garbage in it, particularly garbage around DeFi. And the big concern about this earlier draft, I mean, it has good stuff like it says ETH and Bitcoin are not securities, they're commodities. I mean, that's good. We would all support that. That's the clarity we want.
Thumbs up.
But it has some bad stuff. Because mainly DeFi is not even considered, or worse, in some cases, it's treated the same as CeFi. This is what the Alliance is saying. They're saying forces human intermediation. They're not even considering the possibility that DeFi is code-based and peer-to-peer. So that is bad. And that's why some critics in these earlier drafts have said, look, if something like this passes, bye-bye DeFi in the US. Or maybe like bye-bye US's role in DeFi. You're going to eliminate yourself from the crypto market. So
in what mechanism does it just like, how does that, can you elaborate on that?
I haven't read all of the details of this particular draft, but it seems to do things like make all DeFi protocols in the US register.
Does it just
example.
like operate under the assumption that
Yes.
decentralization is actually like impossible, and therefore there's always somebody to register somewhere?
The high level is it seems to operate under the assumption that all DeFi protocols can be regulated and treated the same way as an FTX or a Coinbase.
Okay, so it's just ignoring the
Go
properties of
register with
crypto.
each state, just the whole same process and apparatus that applies to CeFi and banks. Well, let's just take that, and of course it can apply to some code in a DeFi protocol and the creators of this code. And that just doesn't work. And that's inherently, it breaks the system, destroys the credible neutrality of the system. So I guess my take is, and Jake Travinsky said this, commenting even after this tweet that you originally read was posted, there's been some discussion today as to how the bill, this new bill we're talking about, affects DeFi. Here's what I said after the Senate Ag hearing on the bill last month. I'm hopeful that it can be amended to treat DeFi fairly, but we'll have to wait and see what the next draft says. So I guess my take, while you were out, David, my take is I'm following kind of Jake's lead here, right? Like they're working collectively behind the scenes. There may come a time when it's time to throw up the bat signal and send out the fire alarms, and the bankless community needs to react to this, and all of crypto needs to react to this to either kill it or support it, but we don't know enough yet. So I'm saving that ammo until we know a little bit more. I feel like that's the right approach here. That said, David, there's another story in the midst of this. You want to lead into that?
This is not our first rodeo with undesirable regulation, proposed regulation in Congress. Like the difference here is SBF, Sam Bankman-Fried from FTX, is leading this thing. And has been, apparently he's been in DC, almost living in DC, working with regulators to get this bill through. And that's kind of the big news here that I've gathered from crypto Twitter and around, is that SBF has just decided to go on his own and lead this bill. And it's the incentives here that seem to point in that all of DeFi is semi-regulatable. Therefore, we might as well do it on CeFi rails. And wow, that's really convenient for FTX and SBF. That's kind of been my take here. Is that accurate?
I think some of that criticism might be true. So I guess I would say is in the process of this bill's creation, it's been well known that the SBF has been heavily active. He's not the only one pushing for this bill, but he's been an active participant along with some
only
of
one
the
in crypto,
DeFi.
though, right?
No. There are a lot of DeFi advocates that are involved in this bill.
Interesting.
Crypto lobbyists and such. Some of the people that we would. That you and I and probably the bankless community should actually trust to uphold DeFi rights. They've been also active in this bill and pushing against it. Although I will say, with it, to craft it in kind of an image of what it should be. But I will say, SBF has had some pretty big influence as well. So he's made massive amounts of political contributions. All of these contributions are public, numbering in the millions of dollars. And also, as you said, he's been active. He's been there. He's kind of, I don't know, maybe the adult in the room, right? The person who can kind of bridge fintech and that world and the banking world with this new world of crypto. And he's got some influence. And so, I don't know. It's hard to know. Some people are saying SBF is intentionally trying to sabotage DeFi, right? It's to me, you have to kind of wait and see. These could be rumors. We don't actually know. But what SBF did publish yesterday at the time of recording was, as promised, he says, this is a tweet, my current thoughts on crypto regulation. And he writes a post, to his credit, open, transparent, about his thoughts on a possible digital asset industry standards, right? And he talks about, there's a heading here called sanctions, allow lists, and block lists. There's a section about hacks and accountability. There's a section about asset listing, what's a security, what's not, tokenized equities. There's a section about consumer protections. Generally, the things legislators care about and regulators care about. There's also a section here about DeFi. Okay, so I read this thing yesterday, David, and there are some things that make sense here. And of course, the straw man argument for the people might make to those in the DeFi community is, oh, you're in DeFi, you don't want any regulation at all, right? No, that's not true.
Right.
We actually really want clarity. We really want regulation. Right. But do you know what's worse than no regulation?
Bad regulation.
Yes, bad regulation. If we end up with bad regulation, these laws get on the book, they could set the U.S. Crypto industry back by years, maybe generations. Maybe it'll never recover, right? And so I went through this. Here's my response, David. Sam, this is to SBF.
This was spicy.
With respect, utmost respect for everything you've done in crypto. This absolutely sucks, I said. You're saying DeFi should be OFAC. You're saying on-chain freezes should be normal. You're saying DeFi front ends need to register as a broker-dealer. No, this is not reasonable. This would eliminate the U.S. from the crypto race. And
Sam's advocating for all of those things?
Yes. From his, like, if you read this, and we'll include a link in the show notes, there's this section on OFAC. He says this: then both centralized and decentralized applications can query in real time the list of sanctioned addresses to avoid transferring funds to or accepting funds from those addresses. He's saying basically, if you're a Uniswap or DeFi, and before you let an address do something with your protocol, you have to query the OFAC sanctions list. Is this okay?
So he's advocating for application layer censorship. So
application layer OFAC sanctions, correct?
Yes, right. Okay.
Now he's saying, and he even says this, he's not advocating for validator level censorship.
Right. Yeah.
Right?
Not protocol layer, which is something we're about to talk to in a second.
But Uniswap,
right,
having to basically OFAC check you or not, that is something he's advocating for. What else is there here? Just to back some of these statements up, talking about on-chain freezes. If there's kind of like normalizing the idea of being able to freeze assets on chain, I don't know, possibly the implication is writing that into the code. Obviously, so this would apply to a USDC, but into other assets as well. Maybe validators have this obligation as well. And this one really triggered me. If you host a website that makes it easy for US retail to connect to and trade on a DEX, you would likely have to register it as something like a broker-dealer.
Yo!
David,
what?
If you host an interface for Uniswap, you got to be a broker-dealer. You have to go apply for a license.
Okay, so going and show me the incentive, I'll show you the outcome. FTX, big competitor out there is the aggregate DeFi landscape. And so Sam, the guy who's been donating $39 million to political organizations in the Biden campaign, is now saying, hey, DEXs and DeFi should have to register to become a broker-dealer. That's what regulatory arbitrage is. That's legalized corruption. That's the whole thing we're trying to not do in crypto.
All right. So this is obviously my worry, and I think many of the crypto community's worry. Sam in this thread, and to his credit, SBF was engaging back and forth. Public engagement. People were calling him on this, myself included, others. And he was engaging back and forth. And his point was, hey, if you don't do this, the de facto is worse. And I'm at least working in DC to pass something that is better than nothing, better than what we have today. And
is it?
No, this is terrible. Now, to be clear, I don't want to mix.
It's a hot take.
I don't want to mix this up. His personal thoughts on regulation. I don't want to mix that up with the bill itself. Okay, these ideas are not necessarily in the bill, but this gives you a sense for where his head is. And when I read this, I was just like, oh, we are not here for the same reasons, are we?
Right.
You do this, David.
Well, that's always been our frustration with Sam.
But but you do this, and what's the freaking point? You remove all of the credible neutrality of U.S. crypto, and what do you have? You have nothing.
And it's got to be negative EV for negative expected value for FTX, because if you nuke the cool things that make crypto what they are, where does FTX's business come from? It comes from crypto.
Over the long run, I think that's true. I don't know if he thinks maybe there's some money to be made in basically providing the AML KYC type layer. I mean, there could be or maybe there's, or I don't know what he's thinking. I actually don't understand here. But this to me definitely has a flavor of, a crypto banker not sticking up for DeFi's interest, right?
Yeah.
This is what this is not, we didn't ask for this. We don't want this. If you're going to participate and lobby in DC towards these ends, please don't. Not on my behalf anyway. Right. I don't want any of this.
I request to not have this.
Now, to be fair, he's saying
possible?
If you have feedback, give me a better suggestion. I'm completely happy for the crypto community, the DeFi community to present better suggestions, and we will in the future. And I hope people like Sam actually listen to this feedback. He might not be in it for the reasons we're in it, but he has to respect why crypto is valuable in the first place and not start to erode these values. David, there are some other takes around the community. You want to talk about some of these?
Yeah, DC Investor says, SBF is the most effective value extractor in crypto. He's very transparent in that he wants to siphon value out of your account into whatever causes he claims to care about. Couldn't care less about decentralization. Meanwhile, NPCs here simp and worship him like a hero. Pathetic. Ooh, DC coming in with this spice. Yeah, I mean, so like Sam Bankman-Fried does have this like cult following in crypto. Like anyone that makes like $1 billion in crypto is going to generate a cult following. I think DC is like saying, hey, like let's not do that. Let's not
exalt billionaires because they made billions.
Yeah. Exactly. Yeah.
How about this take?
Scott Lewis says, FTX is spending money to push a law through Congress that may force DeFi protocols to operate like centralized exchanges. This proposal is called the Digital Commodities Consumer Protection Act. A better name would be Digital Commodities FTX Protection Act. That's what I was saying when it's like, yes, this is like, okay, like Sam is like somebody builds a big entity and then they start lobbying regulation to protect them. That I see this take as well. Yes, indeed.
Yeah, I think that is the big fear. This is where that number came from. What's this tweet saying, David?
Yeah, Sam Bankman-Fried has spent $39.3 million, quote, buying DC politicians since January. I mean, anyone who's been living in DC lately has, I mean, that's what you would do.
I mean, and here's the thing. I think we actually do need to spend money. The crypto industry does. The DeFi industry does need to spend money and get out votes in order to get politicians working with us. That's just how the system works. But if
I will bring up that Sam Bankman-Fried has promised to donate 99.9% of his wealth or something to effective altruism and give away all of his money. I haven't seen any tweet talking about him doing that. I would like to know if there's been progress on that front.
I mean, he said he's going to do it later. I don't know. I mean,
yeah,
we'll see.
So am I.
I'm
also going to donate 99.9% of my wealth later.
Are you really though?
Yes, I am.
Are you really?
No.
Okay.
I'm making fun of Sam Bankman-Fried.
I mean, like, I don't know. I mean, I don't judge him on that. You have to wait it. Actually, who else had a take on this? So this is a take from Eric Voorhees responding to SBF. And again, SBF has been on a lot of criticism. I appreciate that he showed up in Washington, that he's like, I appreciate some of what he's doing.
He's not doing nothing.
He's not doing nothing, but like, if he gives us, if it results in terrible legislation, like, please just don't do anything. This is Eric Voorhees saying, you can advocate for effective altruism or you can advocate banning 80 million innocent Iranians from the future of global finance. You can't do both. Glorifying OFAC and proposed crypto industry standards is a non-starter. That to me is actually like effective altruism aside. Like, I actually think the thing that we're trying to do in preserving and propagating crypto protocols and crypto values, that is a public good.
Right.
I mean, like, that is a service to future generations. Mm-hmm. And I wouldn't mind more spent on that. I can't tell a billionaire where to spend his money, but like, if the result is we get something like this, David,
right?
No thanks, man. No thanks.
Yeah. I'm out.
Last thing I'll say is the invitation is open to Sam Bankman-Fried.
We are in DMs. We are in DMs.
Yes.
I'm waiting for him to confirm a week from today.
He said he'd be willing to come on the Bankless podcast and talk about it. And I think that is the form. Like, you can't have a nuanced conversation over Twitter. Yep. Podcast is the form. And we would love for Sam to tell us about his take.
Yeah, exactly.
Tell us what he's thinking, respond to some of these criticisms. And we hope he takes us up on that offer. So we will see, my friend. That is that for now. David, can you tell me what the people really want to hear about? And that is the Aptos Layer 1, baby.
I just cannot wait to hear about Aptos.
Okay.
This shiny new monolithic Layer 1 that's promised to be even faster than all the other previous Layer 1s that have come out has finally gone to mainnet. So Aptos Autumn is here, this tweet says. Was it actually here? I don't really know. But the news that I heard on Twitter and around is that it's not actually what it was all cracked up to be. So Aptos, was a Layer 1 blockchain that was built off of the Move language, which was developed by the, what was that one Facebook chain? Libra, yeah. So for people that weren't around during the Libra era, Facebook was wanting to make a digital currency, literally a new currency.
Yeah, with an ETH killer attached, the whole
With an
smart
ETH killer
contract
attached,
platform.
yeah. Before like Congress said, no, Mark Zuckerberg, you can't have a new reserve currency.
Sorry.
But anyways, the team behind that has gone off and created Aptos using the Move language that Libra was created. It promised to have a maximum ceiling of 100,000 transactions per second. And apparently, I haven't verified this myself because I don't even know how to use Aptos, which is another problem, that the current Aptos TPS is, drumroll, Ryan, 4.
For what?
Transactions per second.
Wow.
Yeah.
That's not the same.
That's less than Ethereum.
Okay.
Interestingly, while the blockchain seems to not be effective, the tokens have definitely been deployed and sent around to all stakeholders. But there's this, and all this news came from this Twitter account called Paradigm Engineer 420, who tweeted out, "Aptos is broken." And so I'll read some key tweets here. Aptos promises 100,000 transactions per second in its finalized version. However, the current TPS is somewhere in the 4 transaction range. It's hard to see how users can even use Aptos right now. I personally cannot find any RPCs worth connecting to or any validators that can send transactions. Aptos team knows something is wrong because between Genesis and 1:30 p.m. Pacific time, the Aptos Discord was disabled. Users couldn't chat or ask any questions, kind of like the blockchain. They only recently opened up a few channels, but important channels like dev resources are still closed. The total supply of the APT token is a little bit over 1 billion. However, 821 million is currently staked. This means that over 80% of the token supply is controlled by the team and investors, and there was no airdrop or no other method to earn mainnet Aptos tokens. However, this doesn't account for the remaining 200 million Aptos tokens. Where could those liquid tokens be? So they propose some potential answers: sitting on investors' FTX accounts waiting to dump on retail, or sitting in investors' Binance accounts waiting to dump on retail. The point is that the nearly entire token supply is going to private parties. There was never a public sale or any method where users could have earned tokens. And then they continue, however, hope is not lost. Sui, another blockchain, is using the Move language with arguably better tech. If I had to guess, Aptos knows that Sui will probably succeed in the long term, and they hoped that by front-running them on launch, they could gain some sort of advantage. I will wait for the Sui launch, try out a few applications on Aptos, and see what would happen. So that is the summary thread that we got out of that. Any takes, Ryan?
Yeah, here's the TLDR in this thread too. You are going to get dumped on. The only play I would make on Aptos is a quick farm and dump. This reminds me
not financial advice.
Yeah, just maybe life advice.
Goes without saying. Yeah.
Do you know? So this reminds me a little bit of like 2018 again, and the kind of the promise of another crop of Ethereum killers, 2018 and 2019. And the best advice I kind of learned at that time that I think now applies to this new group of supposed. This isn't actually an ETH killer. Now it's a Solana killer.
It's a Solana killer,
Aptos
which
is being
is an
kind
ETH
of
killer.
branded, right? Yeah, Solana killer, ETH killer. It's like, and so
By the transitory property.
yeah, but the best advice I could give, not financial advice, life advice, is just try the thing first. Forget about the freaking token. Don't buy a token.
Don't focus on the token.
See if it works. Is there
Yeah.
anything on there that's compelling? Compare it to your experience on other layer 2s and layer 1s. Can you do anything on it?
Do you know the most recent valuation of Aptos? Based off of the
Is it in the billions?
$2 billion.
Damn. Is that all kind of like private valuation? So VCs.
Yes, private valuation stuff. That's the highest number that VCs
A
paid for.
pre-launch chain, right? But again, it had the pedigree, it had Move, the language, it had the X-Meta Facebook
Move.
team.
Oh boy.
I don't know, man. These kind of narratives are worth a lot. There's some few takes. Here's one from Olaf.
Yeah.
Remind me, what's the name of Olaf's firm?
Polychain?
Polychain, multiple chains.
Yeah,
Olaf is definitely embracing multiple chains.
As many chains as possible.
What does he say?
Yeah. Olaf says, the Aptos token distribution scheme is among the worst designs I've ever seen, and I've seen a lot. And then he gives us the numbers. The foundation, 67.5%. The team, 19%. Investors, 13.5%. The only way coins get into, quote, the community, parentheses, lol, is through arbitrary foundation distributions. Yeah, so the only way that community can get tokens is by buying them. Maybe there was some sort of airdrop. I think it was small. It was like maybe a couple $1,000s.
Here's the reaction I'm seeing from the community in all of crypto is like, we're just tired of the extractors and rotators.
I'm so tired. I'm so tired.
We're exhausted by it. It's a bear market. Like,
it's just like, again, you know that one meme of just like the comic is of this guy that goes to like a bear trap and like, bears, this is ridiculous. How are you falling for this? And then like it goes to like some other form of a trap and goes like, this is so silly. How can you fall for this? And then like the last panel would be like him buying the Aptos token.
Yeah, I mean, it's so DC Investor calls this the events of this week a near categorical rejection of Aptos by the community. I saw this mainly by the community. Kobe says, you could tell who bought the seed round because they're tweeting excited for launch, rocket ship emoji, instead of calling it Craptos and tweeting about how it already crashed or something. This is Anthony Sassano. You just know that Three Arrows Capital would be shilling the hell out of Aptos if they were still around. He follows that up.
That was one of my favorite tweets. It's because you can totally see it happening.
Well, this is the follow-up was actually, in my opinion, I even enjoyed this more.
Oh my God, I didn't see this.
He's quoting Three Arrows Capital potential. I have abandoned Ethereum, Avalanche, DR, Polkadot, Terra, Mina, and Solana, despite supporting them in the past. My new chain is Aptos, all in, baby.
Okay, so for the people who didn't get that reference, when when Three Arrows Capital was done with their whole super cycle narrative and they were done on the ETH trade, they moved on to the Sol Luna AVAX trade position. So this was in the second half of 2021. And Suzu said, yes, I have abandoned Ethereum despite supporting them in the past. And so what Anthony Sassano has done, he's just added every other chain that Three Arrows Capital also shilled Avalanche, Near, Polkadot, Terra, Mina, and Solana despite pointing them in the past. That was that reference.
Guys, put your hands up if you are sick and tired of rotators and narratives without the building.
Put your hands up. Yep.
Right here. I'm tired of it.
Come on, SpongeBob.
David's
put your
tired
hands
of
up.
it. Oh yeah, dude, we didn't even comment on David's wearing this ginormous SpongeBob shirt today.
There's a huge SpongeBob on my chest.
It's like
it's meta because it's a sweater of SpongeBob wearing a sweater.
Oh my God, how deep does it go?
Only 2 layers deep.
Okay, 2 layers deep. That's pretty good. Layer 2. Yeah. We'll get to layer 3 later. David, another big thing this week that was a question, it's not just this week, it's been the last couple of weeks, is this
growing,
growing narrative of this talk of Ethereum censorship. And this comes out of kind of OFAC compliant relayers, in particular Flashbots. I pulled up a Reddit post. The title of this, maybe you could explain it to us, is in the last 24 hours, 51% of ETH blocks were censored and OFAC compliant. What is this? What does this mean? Is Ethereum being censored right now?
Yeah, so this is the 51% here is coming from how many blocks came out of the Flashbots or other OFAC compliant relayers. And that doesn't, there's a lot of like stuff packed in there. OFAC compliant, it just means that Tornado Cash transactions are not in this block. So now that we're on the website, we're actually seeing that 54% of blocks are OFAC compliant, as in 54% of Ethereum blocks do not have Tornado Cash transactions in them. I'm pretty sure that's the only thing that means OFAC compliant or not. We're using Tornado Cash
for
transactions.
now, but OFAC could add whatever it wants in the future. It could add, DavidHoffman.eth if it wants.
Yeah. Well, and then there's a couple relayers which are definitely not following OFAC compliance, which are probably outside of the United States, and that's like a very small sliver compared to OFAC compliance. Most blocks are like totally normal blocks. And so there's this big conversation. It's like, okay, we have all these relayers who, and this is strictly a part of the whole proposer builder MEV boost conversation. Where people will build blocks for you, and then relayers will relay that to Ethereum stakers who will choose a block and then stake on that. Somebody like Flashbots, the biggest relayer in Ethereum, because they are a U.S. domiciled entity, has said, hey, we're going to follow OFAC and not violate the law, and we're only going to relay OFAC compliant blocks. So this has created a conversation of, is it the Ethereum protocol being censored? Because there's like 54% of blocks being produced that are OFAC compliant. Now, there is a huge difference between creating a block versus building on prior blocks. And so we'll call it 50-50. 50% of blocks are OFAC compliant, 50% of blocks are non-OFAC compliant. The non-OFAC compliant blocks are taking, comprised of 50% of all blocks added to Ethereum, and then the non-compliant blocks are building on top of those blocks. rather than building on top of the most recent OFAC compliant block. So OFAC non-compliant blocks are making their way into Ethereum easily, and this is not an issue. And so OFAC, so people that want to be OFAC compliant are just adding on to the OFAC non-compliant blocks. So Tornado Cash transactions are getting into Ethereum.
They just take longer.
They take instead of taking probabilistically speaking, instead of taking 12 seconds, they're taking perhaps 24 to 36 seconds to get in. We are worried about this getting worse. We are worried about this approaching, as soon as we start to get like 90 to 95% of all blocks are OFAC compliant, then we actually start to be like, okay, it is now troublesome to use Tornado Cash. But not until we get to something like above 95% would it take like perhaps sometimes up to 5 minutes to get a Tornado Cash transaction into the blockchain. And so it really only becomes a critical issue when we start to actually get into the extreme saturation. And right now we're 50-50. 50-50, still like a lot, still not good. However, it's been my opinion that this is just a very temporary part of Ethereum's history while we are just post-merge without all this other infrastructure. But that is the conversation going on today.
David, this is a form of weak censorship.
Soft censorship, yes.
Is what Justin Drake would call it. And I would encourage you guys, if you want the full story on this, like the full download on how censorship resistant Ethereum is, go listen to the Justin Drake Bankless podcast on uncensorable Ethereum, I think is what it's called. He goes through this exact scenario that's happening right now. And so this is a form of weak censorship, not strong censorship. It's not happening at the validator level. It's happening at the relayer level. And by the way, this relayer job function is set to be eliminated at some point in the protocol.
Right.
We are no longer going to have relayers post some upcoming protocol changes.
Right. And that's a solution that we even have other solutions before we even get to that point too. And so like we are just in this one moment in Ethereum's history where we are at the weakest point of censorship resistance, which is the weeks to months following the merge. This is latelot.eth who put out an interesting poll who said, I'm a solo home validator in country A. We are at war with country B. And I decide that I'm not going to include donations to their military when it's my turn to make a block. This validator should A, be slashed for censoring, B, voluntarily be exited, or C, be tolerated. And about 41% said be slashed for censoring, about 11% said voluntary exit, and 47%, the slim majority, said be tolerated. And that's also what I said, Ryan. I said be tolerated because... and I also asked Martin Koppelman here, asked what his answer was, because I had a debate back and forth with him about how severe the censorship thing was. And Martin Koppelman says, ideally, the validator would not even have the option to censor.
Agreed.
And then Vitalik responded to that and said, I would say be tolerated, as in allow that person to not include blocks. And Vitalik continues and says, slashing or leaking or socially coordinated anything should only be considered for massive reorgs, which was what I was talking about with going back and building on a different chain, even though we know that we already have a good one to begin with. Slashing or leaking should only, or socially coordinated anything should only be considered for massive reorgs of other people's blocks, not making wrong choices about what to put in your own. Any other answer risks turning ETH community into morality police. And I really like this. I think I, as a validator, should get to freely choose what transactions to put into a block, so long as I choose the most recent block to put in. Like, say, for example, I am a religious person, and it is, according to my religion, morally wrong for me to include certain transactions of a certain type into the Ethereum blockchain. I feel like I should be able to be included by the Ethereum protocol, and I should feel free to choose whatever transactions I want to include into the Ethereum protocol. I should not be able to dictate what other people put into the Ethereum protocol. So I feel like I should be able to pick and choose. And that is, we'll call that censorship. But so long as there's not one uniform version of censorship and we are all picking and choosing our own particular flavor of how we want to do our own particular censoring, if you open that up to 10,000 validators, there's no canonical version of like, we are doing this or we have these values. Everyone's transactions ultimately get in, while we also don't censor people's ability to express themselves. That's my take here.
Yeah, I think that makes sense. I think some people are worried, though, David, about like this being sort of a slippery slope. And are we making it socially acceptable to get part of the block building process be OFAC compliant. And some of the criticism has been lobbied at Flashbots themselves. So let's remember how much good Flashbots has done for Ethereum.
Yes.
Like saved Ethereum's ass. I don't know how many times, right? Just like we are in a much more censorship resistant place because of Flashbots. And people are saying, well, now Flashbots is undoing that because they're choosing to host a relayer that is censoring transactions. And why don't they turn it off? Truthfully, David, I don't know the answer to why doesn't Flashbots turn off their relay or not. They might have reasons for this. I have no idea why. I do think that like Flashbots and Phil Diane and others have literally spent their entire like lives, their entire career trying to protect.
Phil Diane is a hero.
Yeah, he's a hero. And so a little bit of me, the back and forth on the social layer, because Phil put out a tweet and he was like, hey, I'm just sick of like the vitriol. Like you guys are like, it's kind of toxic. I'm paraphrasing what Phil said. He said it far more eloquently. But like to me, Phil Diane, this is a little bit like Gotham City complaining about Batman.
About Batman?
Yeah, it's like Flashbots and Batman has been protecting Gotham for a pretty long time. There are sometimes you don't understand Batman's motives. There are sometimes like Batman screws things up and actually should be criticized.
Like cause a car crash.
Sure. Or like maybe he actually genuinely screwed up and we should definitely hold them accountable for this. But like also at the same time, Batman's a good actor. It's like doing it for God. And I don't know, there's an element of that where I feel like we as a community also should have extend some grace to the builders actually trying to protect against this. So these are my takes. And long run, David,
on long run, it is a nothing burger.
I 100% agree. I think we are going to have a censorship resistant. Right. But like, if you want to make your own call on that, Bankless listener, first listen to Justin Drake on uncensorable Ethereum in order to have.
Why we made that podcast.
Yeah, we made it, and we made it before all of this
because
started
we knew
happening.
It was coming.
Yeah. So anyway, that's what I think you should do. David, what do we got coming up next?
Coming up next, we have a new announcement out of Flashbots called Suave, which we have some details on. There was an announcement that I actually had to go ping Hazu. I was like, hey, Hazu, can you give me the details for this? And he was like, no, announcement's coming soon. But then he followed up with some details. So we got those details coming soon. The European Union preparing to ban mining. What's going on over there, and a critical vulnerability found in Cosmos IBC. We'll cover all the details and more. But first, a moment to talk about some of these fantastic sponsors that make the show possible. The reality today is that 5 corporations control the entire world of social media. They own our names, they restrict our content, they monitor our every move. And their time is up, thanks to our sponsor, DESO. DESO is a layer 1 blockchain built from the ground up to decentralize and scale social networks. With DESO, you can own your own identity, content, and social graph and take it with you across hundreds of applications already built on the censorship-resistant DESO blockchain. DESO's storage advantages make it finally possible to build infinite state applications that can efficiently store and index large amounts of content and data fully on-chain. DESO also offers multiple crypto-native monetization primitives for developers and creators, including social NFTs, social DAOs, social tokens, and social tipping. So in order to experience the social layer of Web3, go to DESO.com and claim your username. That's DESO.com. If you've been listening to Bankless, you know that we're fans of the modular blockchain thesis. The idea that blockchains will separate execution from data availability and consensus, allowing all three to become the best versions of themselves. And Fuel has built the fastest modular execution layer in the industry. By supporting parallel transaction execution, Fuel unlocks significantly faster throughput for the Web3 world. Fuel also goes beyond the limitations of the EVM with its own Fuel VM, which is more efficient and optimized, opening up the design space for developers. And lastly, Fuel brings a powerful developer experience with its own domain-specific language, Sway, and a supportive toolchain called Fork. With Fuel, you can have the benefits of smart contract languages like Solidity while adopting the improvements made by the Rust tooling ecosystem, letting the Fuel development environment go beyond the limitations of the EVM. If you want to learn more, there's a link in the show notes to see how you can get involved with the Fuel network. Flashbots reveals new version of its key Ethereum software, reads the CoinDesk headline. Development of Suave, as the project is codenamed, has been going on for over a year now. So this has been something that Flashbots has had I guess like in their back pocket, ready to deploy, and they're coming out with details now. And so this is what I went to Hazu. I was like, Hazu, can you like help me interpret this and what's going on? And he said, details still coming out soon, but conceptually, he says, you can think of Suave as the end game of the Flashbot stack. An auction, an encrypted mempool, and a block builder. It sounds like a bunch of censorship-resistant tools.
Encrypted mempool sounds real good.
I like that. Sounds awesome. As a user, you'll be able to trade on Ethereum through Suave, and any MEV that you create will be captured for you. As a searcher, you will get the perfect environment to trade, including across different chains. And as a roll-up, you can connect to Suave to get the benefits of encrypted MEV-aware trading for your users, unlocking MEV auctions for your stakers, and all in a progressively decentralizing way. So this is why I think like people are being like, Flashbots, stop censoring. What are you doing? What are you doing?
Don't patronize their voice, David.
And then Flashbots, like maybe they don't say anything, but that's because they have this Suave thing, which answers all of the criticisms and claims. Maybe not all of them, but is a decent job of fixing a lot of the stuff. And it's called Suave, and it's coming out soon. And so this is coming out, and I think it's going to really change the conversation of this whole Ethereum censorship thing.
I share that take too. And yet also, I don't want to go on the other side of things and just say, Ethereum community, just trust everyone. Stop caring about censorship so much, right? At some level, it makes me incredibly bullish that we are getting such a reaction from the community to say, this is not okay. OFAC, and I mean, you go the other direction and like go sign up for some of SBF's regulation, right? I don't want to do that either. So we've got to strike the right chord. And like, I don't know, when in doubt, to me, David, the best thing you can do is if you see a problem, grab a shovel. Just help out. If you see it, rather than be critical, help out. Anyway, that's not the form for Twitter. Twitter is all about talk.
Right.
Not a lot of actual things
Cloud
get
farming,
done. What do we got?
Anyways, coming out of zkSync, this is their secret sauce. They have released their secret sauce. There's a lot of people who thought
it's not mainnet yet, though, right?
It's not mainnet, no. But the reason why zkSync is first to mainnet is because they have this crazy zk prover thing that you can prove with a GPU, and this is the piece of the puzzle that really completes a zkEVM, and it's the secret sauce that zkSync has that has allowed them to go to mainnet while everyone else is still releasing their test nets. And so zkSync tweets out, today we are extremely excited to announce that we have successfully completed milestone 3 proof merging. With the integration of validity proofs, which is like if you're talking about an optimistic rollup, that would be a fraud proof. With the integration of validity proofs, zkSync 2.0 is officially the world's first ever zkEVM running on public testnet.
That's the hard thing, right? The validity proofs are the hard thing.
That's the thing.
Okay.
Yes, and there were many other teams. I remember both people out of Arbitrum and Scroll last week who tweeted out. Without naming names, even though they were just basically talking about zkSync. A zkEVM claims to going to mainnet next week, and by no means will it be a complete thing because there's still stuff missing. And while zkSync and many other layer 2 teams are all still have much work to do, this was the thing that they thought wasn't present, and zkSync is saying that it's present. Now, I am not technically competent to be able to vet this myself. I do not have any idea about how a validity proof is created, but zkSync is saying that they got the thing that everyone else says that they didn't. Well, and so these are the layer 2 wars, and they are awesome.
Look, I think this is part of the moment of truth. The other part of the moment of truth is October 28th, once the mainnet ships. And we are, as of the time that this is released, probably 7 days away from that.
8 or 9 days away.
Yeah, 8 now, 7 tomorrow. So,
yes, exactly.
Yeah, we'll get to see it soon, and pretty exciting. And just a reminder, David and I are advisors for zkSync. We're also investors, incredibly bullish about zkEVM in general. You can always find all our disclosures information in the show notes, as usual, guys. Uniswap is on 8 chains, David. I lost track of how many chains Uniswap deployed to. Not just Ethereum mainnet, but 8. And its next one is going to be zkSync.
zkSync making moves. And so the community voted Uniswap v3 will soon to be deployed on zkSync Uniswap's 8th chain. Sounds like a multi-chain world if you ask me, Ryan. And it sounds like the multi-chain world that you and I were talking about while everyone else was talking about all the alt layer ones. So I'm just going to take a quick.
Well, what are the
victory lap
chains?
right there.
What are the chains? You know?
They're all Ethereum EVMs.
No, so there's not like
Arbitrum, Polygon, Optimism. What's the other? Like now
Avalanche?
ZK Sync. Maybe
They didn't do Avalanche. They did all of
what
the
are they?
Ethereum aligned chains. Is that what you're saying?
Yes. Yeah.
By the way, I'm really excited about the episode that we're releasing coming up with Dan Litzer about the app chain thesis.
Yes.
This ties very nicely into that.
Super hot episode.
Yeah, just teasing
Bankless
that.
Premium listeners probably going to get that pretty damn soon here.
Yeah, hopefully you guys will.
But we have so many podcasts in queue that it's actually going to come out for Bankless Premium subscribers probably like 10 to 15 days before we actually release it.
Is that a promise?
So,
That's a Bankless Premium promise David just made on
the
podcast.
Bankless editors are like, damn it, David, what did you just promise?
How about this?
This is pretty cool, Ryan.
Well, is it cool?
Yes. Okay. So as somebody who came from a tokenized real estate startup, this is actually pretty cool.
All right, read it first.
Digital real estate platform sells house as an NFT. So you can buy a house on chain. And this is an article out of the Defiant. The way that this works is each home is titled as a limited liability company and is associated with a unique NFT on the Ethereum blockchain. This is how my old startup did it, except we did it with ERC20s instead of NFTs, and we also fractionalized it. The process here is that when the lender, there's a lender involved, approves and funds the borrower's request on Teller, the USDC Homes platform uses the funds to purchase the LLC NFT. The NFT is then transferred to a multi-sig wallet that serves as an escrow account until the buyer pays back the entire loan and accrued interest. So there is also a mortgage and loan application being going on here as well. And this is coming out of this platform called Roofstock, which was just a normal TradFi business. I remember like using Roofstock as like the competitor to go after when we were using our like leveraging like the blockchain when they weren't.
Wait, are you talking about
like
your previous startup that David used to work with? It's called Realty.
Realty, yeah. And then but Roofstock has made their own on-chain marketplace. So they are making I think that's on-chain is the name, on capital C chain property marketplace. And so that is pretty damn cool.
Okay. Can I take the counter to this?
I didn't know we were arguing.
Okay. No. I don't know. Is it cool though? Okay, so I have been promised real estate on chain forever. Okay.
Yes.
And it's never taken off.
It's been
5 years.
It's been a big
5
meme,
years.
yeah.
And used to work at Realty. So I've heard your previous thoughts on this. I know this is different because it's an NFT and it's cool. It seems like it's attached to kind of like.
It's also different because it's a business that already existed.
Okay.
That was doing democratizing access to real estate property.
Okay, I get that. But also still the house is off chain, right? So all
Yes.
you're getting is kind
Yes.
of this global transaction verification of an off-chain asset. It's like the real world assets on-chain thing that's just also still hasn't really taken off very much yet.
Yes, your take now is it's not crypto native, therefore why should I be excited about it? Because it still meets space legal regulation.
Kinda.
You're
That's
totally
part
right.
of the take. And then also the other
Yeah.
take is just like, it's been 5 damn years.
Right. Okay, but the fact that Roofstock is doing this is different.
Okay.
Because again, like I said, they're not a startup. They already are like profitable as a company, probably, and they are now getting into blockchain stuff. And so you're totally right in that, and this is why like tokenized real estate was also just fundamentally uninteresting to me in the first place, was that it's not crypto native. Like I like things like ultrasound money or CryptoPunks, but tokenized real estate or off-chain real estate is inherently not actually blockchain innovation. It's legal system innovation. It's like lawyer innovation. It's lawyer heavy, blockchain light. But we're seeing signs of this starting to actually roll.
Okay.
And so we'll see. And like there are benefits of doing on-chain stuff. There are literal just a bigger marketplace for on-chain stuff. And just things are actually easier. Payments and escrow and all that stuff. As somebody who recently, bought a house and did the whole escrow process, I would have loved for that to have been a multi-sig on-chain. I could totally see how that would have translated. So there are real efficiency improvements by using blockchain
All right.
stuff.
It's honestly, I've always thought it's only a matter of time, right? It's just not going to be the first. It's kind of somewhere between like, crypto money that we have and like being able to buy a coffee with Bitcoin, right? It's like somewhere in between kind of the spectrum of when it happens in our trajectory.
Yes.
But this is cool, David. All right.
This is cooler.
I think
this is definitely cooler.
You think it's cooler? I think it's way cooler.
it's
Yeah.
cooler.
This is an example of like stuff that went under the radar, right? 2.5 million people just created crypto wallets using Reddit, and no one noticed, including the Redditors themselves, I'm pretty sure.
Not even them.
Right?
They didn't even notice.
Okay, so this is a story from TechCrunch. Redditors have created millions of crypto wallets to buy NFT avatars. This is a tweet during a panel at TechCrunch Disrupt. The Reddit chief product officer revealed that to date, Reddit's Vault blockchain, which by the way is based on Polygon technology, created over 3 million crypto wallets to date. 3 million crypto wallets, and they didn't even know that they were creating it. Most of these, 2.5 million of them, were created to purchase NFT avatars that could be sold as profile pics on the platform. 40,000 of these things sold between $9.99 and $99.99. And most of these sales are with
I want to emphasize that 40,000 NFTs were sold at various price ranges from $10 to $100, and they sold out. And remember, I remember talking about this a few weeks ago where Reddit was going to do this, and somebody made the comment how they never used the word NFT. They just used digital collectible, and they sold it with a credit card. So not NFTs that are actually NFTs were sold with credit cards, and 30 artists released 40,000 avatars, and they all sold out. And so what's the lesson here? NFTs, don't call them NFTs. Don't make them use crypto and just charge them credit cards. And that worked. And so like there's now perhaps like millions of people who don't know that they just bought an NFT on a blockchain.
And that they've opened
a
real crypto wallet.
Yes.
They don't know that either. That's how seamless
Users
the
who
experience is.
purchased one of the limited edition pictures got licensing rights to use it on and off Reddit as an avatar and could mix and match their avatar's look using a built-in avatar builder tool. That is cool. And this has always been the bull case for Ethereum, is that it finds its way into all corners of the internet and you don't actually notice that it's there.
I mean, just to benchmark this, okay? So Reddit maybe just onboarded 3 million people to crypto wallets, okay? OpenSea has about 1 million active wallets. As of last January, they had that. MetaMask does about 30 million users. So bam, 2.5 million users, just like that. That's how quickly social media can scale us. David, what's the story?
European Union countries must be ready to block crypto mining, says the European Commission. Members of the European Union, the EU is developing an energy efficient label for blockchains, basically approved or unapproved blockchains, as the distribution of gas supplies from Russia leaves them fearing high energy prices, blackouts, and shortages. So there's a quote here. In case there is a need for load shedding in the electricity systems, the EU member states must be ready to stop crypto asset mining, the Commission said. Load shedding is, of course, when energy companies deliberately switch off supply to a certain set of users to avoid the entire grid toppling. In the coming months to years, the Commission intends to take various steps to boost digital energy services while ensuring an energy-efficient sector, including an energy-efficient label for blockchains. I feel like, Ryan, I called this when we saw the invasion of Ukraine by Russia. We saw the coming energy squeeze as we are going into the winter. And then Ethereum went proof of stake. And right around the time where energy prices start to go through the roof in Europe. And now the European Union says we're going to have to stop crypto mining, which is basically at this point, Ryan, just Bitcoin mining because energy is in short supply. I feel like I called this.
It's unfortunately for Bitcoin proof of work too. It's not just the fact that they they want to stop it because of the energy waste narrative. It's the fact that they can stop it.
And it's also not just the narrative. They need the energy to power people's homes that Bitcoin is sucking up.
Right. That is the fact on the ground too. I know it's. I think it's a major problem for proof of work moving forward, and certainly a regulatory burden for Bitcoin. David, what's this? What happened with Cosmos last week?
Yeah, huge security vulnerability, at least it's allegedly huge. On October 13th, Ethan Buckman, the co-founder of the IBC ecosystem of Cosmos, says that a critical security vulnerability has been discovered that impacts all IBC-enabled Cosmos chains for all versions of IBC, as in the whole thing. Buckman assured that steps have already been taken to ensure that all major public IBC-enabled chains have been patched. Yeah, wow. The whole thing got a bug.
I mean, this sounds
crazy.
really bad because IBC
Sounds really bad.
everywhere. I mean, if something like this could take down the entire interchain.
Yes.
It's funny. This just came out after.
But it's patched.
It's patched, thank God. And they found it before
Nothing
anything really bad happened. But it's disconcerting when something like this is kind of so deep in the code. David, BNY Mellon, this is a bank, old school, traditional bank. They just launched a digital asset custody platform. Is this a big deal?
Well, it's not only a very old bank, it's America's oldest bank,
Really?
Ryan. 238 years old. Select clients will now be able to hold and transfer Bitcoin and Ether. So a quote from the article, while BNY is not the first bank to explore crypto, this is still big important news because BNY Mellon reaches 20% of the world's investable assets, a remarkable 42 trillion in assets under custody and 1.8 trillion in assets under management. Those are big numbers.
Shows you how.
Well, remember how the crypto industry is currently at 0.95 trillion, and BNY Mellon has 1.8 trillion in assets under management.
It's Bitcoin and Ether.
Bitcoin and Ether.
It shows you how, I guess, saturated Bitcoin and Ether have become among mainstream finance as well. We got a lot more work to do with DeFi, but Bitcoin and Ether as assets are there. Getting into releases, dYdX just released an option for fiat onboarding. Is that what this looks like?
Credit card deposit. So yeah, you can now fund your dYdX account with a credit card. And my only take here is that the current Ethereum ecosystem or crypto ecosystem has 5, 6, 7, 8, 9, 10, 10 on-ramps of fiat. But the bull case for Ethereum is that it goes to infinity because all of the apps on all the chains all have their own native onboarding, if they need it. And that's what we're seeing here is that you just dYdX is an application. It's going to be its own chain. It has its own native onboarding. So every single endpoint of Ethereum can produce its own
I think so. I think what you're
crypto.
saying, if you want to get money into DeFi, fiat into DeFi, you have to take a step. And that step is usually in the form of your bank to a crypto exchange like a Coinbase or Gemini to DeFi, right? It's like a 3-step hop. This goes direct from bank to DeFi.
Bank to DeFi.
Very nice. How about this? What's OPCraft?
OPCraft is an autonomous world, a fully on-chain virtual space, kind of like Minecraft, definitely like Minecraft, where the entire world, every aspect, every river, blade of grass, every patch of snow on the mountains exists on-chain, and every single action in the world happens as an Ethereum transaction. So this is built using what Optimism released at a little bit before DEF CON, which is the OP stack. And so the OP stack is this modular layer 2 stack. I think it's going to be the future of layer 2s because just like how Ethereum layer 1 has going from monolithic to modular, so are Ethereum layer 2s. Except what OPCraft has done is they've popped out the Ethereum VM and they popped in Minecraft. Which is crazy. Why would you do this? I don't know. But now we have a verifiable state machine of Minecraft that now exists as a part of the OP stack.
This is really cool. So there's a link in there, by the way, where you can play OPCraft if you want to try that out. David, on the raises this week, the most notable one I think was this one from ChainSafe. ChainSafe is excited to announce that they raised $18.75 million as a Series A. The reason that's notable is ChainSafe. What do they do, David?
They make clients. They make 3 main clients. They make Lodestar for Ethereum. They make a client for Polkadot. They also make a client for Filecoin. So cool. We like it when our clients get money because this entire industry is built on clients. So that's that. Congrats to the ChainSafe team.
This reminds me of the episode that we did early in the week with Arbitrum's purchase of Prismatic and the Prism team, the major Ethereum client, of course. You can catch that in the RSS feed somewhere. It's also with a raise. It's time to remind you that we have a jobs board. It's live. Crypto's hiring. And what should people do, David?
They should get a job, Ryan.
Get a job in crypto. Do you know, I saw some tweets back like, hey, I did it. Ryan, David, I got a job in crypto. I see that almost every week. Yeah,
they're my favorite tweets.
If you do get a job in crypto, make sure you shout out because congrats to you. And also,
you deserve
welcome.
Congrats. Yeah.
Welcome
to the world of Web3.
I'm going to read a few jobs for you guys, as I usually do. Uniswap Labs hiring a director of product management platform. Non-technical?
Is that? I don't really know.
Question mark.
I think non-technical.
Developer relations lead.
Developer relations?
Yeah, I'm really stumping David. I think that's
hard.
non-technical. You need to know a little bit But I think that I'm going to say that's non-technical. Senior front-end engineer, that's technical.
That's technical.
Senior back-end engineer, trading platform, technical.
That's technical.
Head of security at Optimism.
That's technical.
Senior infrastructure engineer, DevOps.
That's technical.
We got roles from Rabbit Hole, CoinShift, Ribbit Capital, and on. If you want access to all of these jobs, go to bankless.pallet.com/jobs and log in and find out more. All right, guys, coming up, we've got some takes from Twitter. Of course, Bitcoin and ETH, what were they worth 5 years ago compared to now? And what does that tell us about the future? Of course, as always, make sure you like and subscribe if you're enjoying this episode so far. We'll be right back, but before we do, we want to thank the sponsors that made this episode possible.
Sequence is the all-in-one developer platform you need to build Web3 games and applications. For your users, Sequence is a smart wallet, and it's the easiest, most intuitive onboarding your users will ever experience, and comes with all the features users need to feel empowered in the Web3 world. Multi-chain support, NFT display, and users can buy SFTs, NFTs, and crypto directly with a credit or debit card. For developers, Sequence is the plug-and-play platform for Web3 games and apps. Their APIs let you bring NFTs, SFTs, and tokens into your game or application. And a Sequence relayer enables gasless transactions for your users. Sequence already powers some of the best Web3 games like Skyweaver, NFT projects like Cool Cats, and marketplaces like NiftySwap. And Sequence is compatible with all the EVM chains, including Ethereum, Polygon, Binance Smart Chain, Arbitrum, Optimism, and Avalanche. So go to sequence.xyz/bankless to start building, or speak with the Sequence team today. TRUEFI is DeFi's largest credit protocol, connecting global lenders with institutional-grade lending opportunities. TRUEFI has completed over $1.7 billion in originations and paid out nearly $35 million to lenders, proving that DeFi is ready to take its next big leap into the $8 trillion credit market. TRUEFI gives lenders like you access to sustainable, high-yield opportunities backed by real-world investments, usually reserved for high-net-worth individuals. At the same time, fund managers use TRUEFI's financial infrastructure to bring their portfolios on-chain, benefiting from the global liquidity, cost savings, and transparency of DeFi. TRUEFI is a decentralized financial utility. The protocol is owned and governed by the TRUEFI DAO, and TRUEFI is here to bring DeFi into the golden age, bridging the power and access of crypto with institutional-grade lending opportunities and portfolio tooling. Explore the diverse financial opportunities available on TRUEFI or launch your own portfolio at truefi.io. Robert Leshner tweets out, "Think of all that has happened in crypto and globally since January of 2018. The reason why he's saying January 2018, because that was the top of the 2017 ICO mania. It was December to January. And then he goes, well, keep thinking about it. Bitcoin and Ether are both worth less than they were 5 years ago. It's also an anniversary of the top of 2017 tweet. That's basically also what's going on here. But Robert Leshner says Bitcoin and Ether are worth less than they were 5 years ago. How does that make you feel, Ryan?
Confused.
Yeah, also confused. I don't know how to feel
really
about
tripping
this.
me out. Okay, Robert. I'm thinking about it. He says, keep thinking about it. I'm thinking about it. Is that bullish
I think it's
or
bullish.
bearish?
It's bullish.
Well, we always, when in doubt, always
be
side
bullish.
on the side of
Always
bullish.
be bullish.
I think it's bullish. I think it means,
bullish.
well, probably it was very bearish if you were in January 2018. Mean that there's a lot of price and not a lot here.
Right.
So
it was the next 5 years of growth priced in.
It's
in
already
December
priced
of January,
in, right?
Uh-huh.
But now the question is, are the next 5 years of growth priced in with an ETH at what, 2,000 or 1,200 something? Is that what we read at the top of the episode?
Yeah. I'm going to go with no. No, it's not priced in.
I'm going to go with hell no. It's
Hell
not
no.
priced in. Can't be priced in.
I don't
no
think
way.
there's ever been a moment where the full potential of Ethereum has been priced in, except at the top.
Well, yes, and we won't know, of course, until we see the full potential of Ethereum, what the full price should be. But yeah, I don't know. I think that's what he's probably saying. Although you could interpret this the other way and be like, I guess nothing's happened. I think he's saying a lot's happened in the last 5 years. That's what he's saying.
Yes, I'm pretty sure it's
All
bullish.
right, what's this? David Hoffman is saying, Bankless is bigger than just Bankless HQ. And here you are with a photo, someone in a Bankless tee, but it looks a little different. What's this Bankless tee?
Yeah, this is the Bankless Brazil guys, which Ryan, I've signed us up for a podcast with them next week.
Oh, cool.
So we're gonna record
do I
with them
need to
next
know
week.
Portuguese or am I good?
No, I don't know Portuguese either.
Okay.
But yeah, I mean, it's just cool to see all the different flavors of Bankless teas that are out and about DevCon. And so shout out to the Bankless Brazil team who just keeps on chugging along.
They're
Looking forward to
crushing
talking
it.
with you guys.
Their podcast
Yeah,
is
they're
great.
crushing
It's
it.
in my feed.
Yeah.
I listen to it because but I don't understand Portuguese, but it's just fantastic. And these guys are crushing it. Social media as well. Here's a tweet from Tom Emmer. Do you want to read this one?
Yeah, Tom Emmer, Representative Tom Emmer says, decentralization is the point. I'm pretty sure this is subtweeting SBF. If we sacrifice DeFi for legislation, we're throwing away the opportunity. Yes. Nice job, Tom Emmer.
David, it's a politician saying this.
Yeah, that's cool. That's
It's incredible. It's amazing. One other tweet. This is the classic regulatory capture attack.
Reads the tweet. Yeah.
Reads the tweet. Here's what you do if you want to classically
Everyone
achieve
write down your
regulatory
notes.
capture. Okay, this is Dr. Nick. This was a tweet put out over the summer, but I think it's resurfaced, and you might see why. So if you want to capture an industry, here's what you do. Number one, you enter a nascent, unregulated industry, and then you be early, you be lucky, and you be aggressive. You make hay while the sun shines. Then,
Okay, so you build a business and you make a lot of money.
yep, step one. Step two, you get away with whatever you can. You push it right up to the point where you're told to stop. You find the boundaries. Step two.
Okay, so you liquidate your own customers, you shill a bunch of tokens, and you make more money.
Check. Number three, you've made your billions. Well done. Got your market share. Now it's time to shut the door behind you. You spend a good chunk of your spoils on compliance, in quotes. The goal now is to be the market leader at the regulations you know are coming. Lawyer up to the max. Starts to sound like someone I know.
Okay.
Number four, you know they're coming because it's you that's lobbying for them. This industry needs, quote, cleaning up for the good of the customer. Even better if you think of the children. Even better if you can find a think of the children narrative. You're the champion of making this industry better.
So like you make a bunch of blog posts that are like, hey, we need to protect consumers, and you talk about that a lot.
You spend time in Washington. You're the adult in the room. You know how to solve this. You get where they're coming from. You get where crypto's coming from, or whatever industry you're trying to conquer.
Sure.
Number five, this gets the regulators on your side because you're the actor most progressive in the industry and compliance. They have to let you pass because you're top of the pile. They can't be seen destroying the industry, so they need a good guy to get behind. Kind of a fall guy, good guy. Hey, if this person says it's okay, it must be okay, right? And he's crypto and you're crypto. Why don't you like it? Number six, every other newcomer to the space hasn't made enough money yet to be able to afford the new compliance regime.
Yeah, this is regulatory arbitrage. Okay, cool.
You're shutting them out. And in any case, you've hired all the people that know how to impact the rules and implement them. In fact, you've made the rules, so you know them better than anyone. Number seven, here's what happens next. Maybe we're at number seven. Regulations come in. Everyone dies apart from you and the handful of big players on your tail, or the ones willing to play the outlaw regulatory arbitrage game. So what do you do now? Now your job is to layer on the bureaucracy, lobby for the regulations to fit the way you're already doing it. If you have a competitor that's doing it radically different, lobby to make it illegal. Congratulations, you've captured the industry. Now it's time for ultra monopoly, own it all, crush your competitors, make your shareholders happy. The end.
I hate this movie. This movie
I've
sucks.
seen this movie before.
I've seen this movie before.
The banking industry. It's so many industries. It's social media. It's so many industries that achieve
it's every
regulatory
industry
capture.
that, and this is why Ethereum as a protocol and the All Core Devs Call puts such a strong emphasis on credible neutrality, because the one thing that we are trying to do in Ethereum is make systems that are capture resistant. And this tweet thread starts with the classic regulatory capture attack.
It's so
When was this tweet thread written?
I can go
when
the
was
date
this
on
written?
this.
July 3rd, 2022. Months ago.
Months ago. And, we don't have to name names, obviously, but this is what we should be wary of in the industry. And particularly, I think the threat could be coming from crypto bankers in the industry.
Crypto banks, yep.
Specifically. It could be coming from DeFi at another stage, maybe DeFi protocols, but not right now.
Maybe.
All right, David, what are you excited about this week? What's making you bullish?
I am bullish on college kids, Ryan.
What?
On Monday, I went and gave a talk to the Princeton Blockchain Club. About 12 Princeton kids who were all super into crypto. A bunch of juniors, a few freshmen, a couple seniors. And the questions they asked were really, really smart.
Like what?
And if you're asking smart questions about crypto, you're already like half of the way through it.
I'm told Princeton kids are pretty smart.
They are pretty smart, allegedly, yes. And then also, tomorrow, on Friday, I'm going to go and teach a computer science class about Ethereum.
Wait, David doing computer science? They're in trouble. Someone's in trouble.
Yeah. Okay,
Someone's
so
getting
I'm going to talk about, I'm going to do my classic, Ethereum is a piece of software that's actually meant to produce culture. So because like somebody else can teach them computer science way better than I can.
Yeah.
But I'm going to talk about how code influences culture, applications of
and you're
culture.
gonna be wearing
right?
your SpongeBob sweater in order to do that.
Perhaps.
Show them culture.
Exactly. Yeah. Anyways, I'm just like stoked on it because like there's more and more surface area for college kids, universities, both grad and undergrad. There's graduate students in the NYU class to get exposure to crypto. And the professor of this class I actually met at ECC. So professors are in the Ethereum community going back to their university to teach their kids about crypto.
What do you think the like at colleges and universities? Do you think any students are listening to Bankless? You think we get the Gen Z student
yeah. So
energy?
the professor, I asked her, is like, how much of Bankless is in your your what do you call it? Curriculum.
Yeah.
And she was like, a lot of Bankless.
Really? Like articles?
Yes.
Episodes?
Yes. And Evan McMullen has also taught, like guest lectured for classes around New York.
Yeah.
And she says she just like regurgitates Bankless episodes.
Nice. Well, I've always wanted.
And that's
to
just
be
the ones we know about.
I've always wanted to be a professor personally.
I've also always wanted to be a professor.
Well, maybe are we being professors right now? Is this how you
We're
do?
Pseudo professor. Yeah. Podcast.
I both
professors,
want to, and I
armchair
really, really don't want to. Do you know what I mean? Like,
yeah, I want to guest lecture. I don't want to teach.
yeah. Well, you live in the dream, man. That's awesome, dude.
Yeah. What are you bullish on, man?
I am bullish that this bear market doesn't feel like a bear market. What I'll say is it just feels different. I've said this before, but look, 2018, 2019, if you weren't there, it was utter despair. Ethereum was dead. Bitcoin was maybe kind of alive. It was on life support, but DeFi had zero product market fit.
It was the Great Depression of crypto.
It was real. It was very bleak. It was very sad. This does not feel like that at all.
No.
Prices are down, but there's no depression. I mean, the builders are building. Like nothing has stopped that. Nothing has stopped. In fact, I think the velocity has increased because there's less noise.
Yes.
And there's more signal.
Good building is off the charts.
There's
Bad
also
building is
like
at
better
all-time
talent
lows.
entering the space. And so we actually slowed down our building, I think, during the last bear
100%.
market. We didn't even know what to build. And this time I see more firm like resolution rather than despair. And so this is the bear market, but it's a bear market that's different than the last one. This one, bear market, we already have product market fit. And you know what I think this makes it, David? It's the most obvious bear market ever because you know we're coming out the other side. The most obvious time to buy is what I mean.
Ah, okay.
Like-
yes, like obvious bear market. I don't think anyone was contesting that's a bear market.
Like the most obvious...
bear market implying that like we're actually going to go and end the bear market.
Exactly. A bear market before the bull market is what I mean.
Sure.
It's just only a matter of time. And I didn't honestly feel like so last time, David, I was like, we might not make it. Like this story might not end well. This is a completely different feeling, which means like I'm back to maybe Leschner's tweet, right? It's like, this is the price of ETH now. It's the price that was 5 years ago. And look at the 5 years of building. And look at all of the talent that is continuing to build in the space and has entered the space in order to build. Tell me you're bullish on that. Bearish on that. I dare you to be bearish on that.
No.
So it's going to be fine. And I think that's the difference between this one and the last.
Nice. Getting me bullish.
Getting you excited. Getting the people excited at the end of the podcast. All right. What's the meme of the week? Is that going to get them excited?
Meme of the week. Let's do it. Anyone else getting deja vu, says Nick White of Celestia. Monolithic layer ones are like iPhones, made to be obsolete in a couple of years, so you buy a new one. And here's the meme of this guy receiving a shirt as a present, and it's the same exact shirt he already is wearing. And he's wearing Solana. What's the one below Solana again?
Cardano.
Cardano. I don't know why Cardano's there actually. Definity, Avalanche, and now he's holding Aptos, and he goes, "Oh my God, thanks! I can't wait to try out my new monolithic layer one." I do like the evolution of like monolithic layer ones. That's just like a shinier phone, a shinier iPhone.
Yeah.
I think that's a good metaphor.
Yeah, totally. I love this guy's face too. He just like got the exact same gift. We keep receiving this gift every single cycle.
Well, he clearly loves it. He's wearing it.
Totally. Just put another one in the closet. It's a benefit. I guess maybe you could do that with layer ones too. Yeah. All right, guys. This has been the roll up. We appreciate you hanging with us. As always, got to remind you of this very important advice that is not financial advice. Risks and disclaimers. ETH is risky. Bitcoin is risky. So is DeFi. So is all crypto. You could lose what you put in, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
But I want this guy right here. Ryan Sean Adams. I don't know who the F you are because you're not important. But here he says, please, dear Lord, and any lawmakers or adults reading this tweet, just know BitBoy doesn't represent us either. Talk to Jay Stravinsky. Talk to Miller CWL. Talk to Coin Center. You know what? We are tired of people that look like this guy trying to run stuff. I don't represent the people. The fuck I don't. I'm the one who does. It's me. I'm the one out here putting the work in behind the scenes trying to save crypto while these devils, Sam Bankman-Fried, Brian Armstrong, they're trying to permanently ruin it. This is not about money for me. I hope you guys understand this. I am here fighting for you. This guy with these freaking glasses on, this douchebag, is out here trying to tell you that only the suits know what to do. Only the suits. Only the people who have all the money. They're the ones who can determine what happens. No, our bill is for the people. And you're going to find this out. We've got the funding for it, and it's coming out.